Hi everyone, it's Jimmy Nguyen, founding president of Bitcoin Association, and welcome to the very first episode of our new online web series about blockchain law and policy. We are very, very honored to have with us today for our very first show, a U.S. Congressman, Patrick McHenry, who is representing North Carolina's 10th district. He is serving in his 8th term in the United States Congress, and in the 116th Congress, Congressman McHenry was serving as the Republican leader of the House Financial Services Committee, advocating for innovative solutions that increase access to banking as well as credit for families and small businesses. Prior to serving as the Republican leader, McHenry also served as vice chairman of the House Financial Services Committee. He is one of the strongest advocates in Congress and proponents for positive adoption of digital currencies and blockchain technologies. Thank you, Congressman, for joining us. We're so happy to have you.
Thank you, Jimmy. Appreciate it.
Are you staying safe in these crazy times?
Thank you for asking. Yeah, safe and healthy, thankfully, and trying to do my best to be a voice of sanity in this pretty wild marketplace of politics right now.
I understand. So we're here today to talk about digital currency and blockchain technology and your views on the growth of this exciting industry. So why don't you tell us what prompts and motivates your particular interests in blockchain and digital currency?
Well, financial technology generally. I saw the benefits of financial technology to my father's entrepreneurial business that he started out of our backyard. He was able to convince a salesperson to give him favorable terms for his first piece of equipment. And his second piece of equipment he bought, he put on a master charge, which was the brand new financial technology innovation of its day. And that master charge, now MasterCard, was a huge boost to him being able to start a business and put my two brothers, two sisters, and I through college. So I see the huge benefits for entrepreneurs and everyday people via technology transformation and new access to credit and availability of credit.
Yeah, that's a great story. It's good that you tell it because I think people need a personal connection to the value of technology, especially technology like blockchain, which is difficult to understand. They need to understand.
It truly is. And we're seeing this, that there's microfinance options available globally. But we just saw a new study that for American immigrants, it's access to other immigrant communities for lending and for investment that is their main source of bootstrapping businesses. And we need to make sure that that's more available, more widely available at cheaper, more competitive rates.
It's interesting you say that because I'm an immigrant. I was born in Vietnam, Saigon, and my family came to the United States, left the night before Saigon fell in 1975. And so I was raised in Southern California. And I know one of the things that would have helped my family at the time when there was no Southeast Asian immigrant population was access to other immigrant sources of money, capital, if they had wanted to start a business, which it was difficult for them to do at the time, so they did not. But as I saw the Vietnamese immigrant population start to build businesses in Southern California, Little Saigon, we've increasingly seen more capital available from their local community, but that took probably 20 plus years to achieve. How do you think fintech technologies can really help particularly immigrant communities?
Well, I think that's going to be a great way for us to bring small risk capital, meaning something that's affordable for somebody who has small savings to invest in a neighbor, and for folks to have a tighter relationship connection. We see this online where people build an online reputation. Right. And though you don't actually physically meet or know each other, you know the character of the person based off of their online activity. I think you can build out this this network, not just for immigrants, but for folks that are in areas that don't get much investment in capital. We're seeing urban areas left behind and rural areas left behind in the United States. And we need to make sure that those communities that have been, frankly, not been encouraged or paid attention to, and immigrant communities are certainly a huge part of that as well, to make sure that they get access to capital so they can take their ideas and take them and make them into usable businesses for the rest of society.
Right. That's probably important for rural communities in the United States too, right?
Absolutely. Absolutely.
So let's shift to how blockchain technology and digital currencies can help that. One of the true powers of blockchain technology is removing intermediaries or reducing their role and therefore increasing efficiency. So in the payment system, for our audience who may not be as familiar, a lot of different companies take a cut or are involved in making a credit card payment, and that adds to fees. Same thing with lending. If you have many people involved, it adds layers of cost. How do you see blockchain technology as being able to reduce those costs and make it more capable of doing small lending amounts? For example, if you're not a big bank, you could be the lender to your neighbor, as you mentioned, or if you're looking to start a small business, it's easier to get capital at reduced cost. Give us your thoughts on how blockchain can help that.
Well, look, the movement of money here in the United States, we pay more for the movement of funds than the rest of the first world. And there's a profit motive for that, certainly. But what we need is action to bring more competition into the exchange of money, the movement of money. And we see this in sort of the first layer, which is the ability for PayPal or Venmo for us to exchange, to basically split a tab, a bar tab or a restaurant tab, if we go back to restaurants. And so people think of that as cheap and affordable, but when you get into the next layer of it, the next layer of understanding, it's still a very expensive and slow way to move money. We also see the benefits across society of digitization, right? Using technology, in essence, instead of having a person make the decision, you enable the technology to do it quickly and efficiently. And once that technology stood up, there's massive cost savings for that. So you combine the two, that competitive marketplace for moving money and digitization, and you can really see how this will make the small exchange of cash, the small exchange of value, very, very affordable and competitive. That's what I think is interesting. So it's not the movement of $1 million between institutions that's of interest. It's the ability for me to give you 25 cents. Right now, we don't have an affordable way to do that. But imagine you're talking about very small transactions to perhaps read an article, for a driverless car to ask another driverless car to let you pass. There's huge opportunities that are quite limitless for the use of blockchain technology, Bitcoin being the sort of granddaddy of them all, if you will, the first mover, the OG in the space. And I think there's a huge opportunity for that mindset to sort of move across society and have these enormous opportunities for us to use them.
Funny, you've just articulated, if you didn't realize it, the whole philosophy behind our version of Bitcoin SV, which is designed to scale very big so that transaction fees can be very, very small and transactions can be sent quickly so that you can send small amounts of money, not just big amounts. So for example, the transaction fee on our network is less than 1/100th of a US cent, which makes it possible, as you mentioned, to do a transaction of 25 cents or even 1 cent. How important do you think it is for all of the different blockchain attempts out there to scale to the ability to send these micro payments or small payments?
Well, I think that is really the value set for society at this point, right? But again, I mean, this point, this is like, the Defense Department setting up DARPANet right?
Mhm.
It's very difficult to conceive of what that would mean 10, 20, 30 years, 40 years down the line. And so the first layer here is to actually monetize the internet, and to make the internet truly the internet of money. And Bitcoin is that layer that will enable us to take the exchange of data and actually have an exchange of data for some value, some money-like proposition. So I think it's a huge opportunity to connect data and some value, some tradable value. And I think that is the whole layer that builds thereafter, is sort of beyond my capacity as a thinker. I'll leave that to the deeper thinkers in this space.
Well, you've actually thought about it quite well, because not a lot of people quite see that. In fact, one of the phrases I use often in my speeches about Bitcoin SV, is that Bitcoin is really the fusion of data, bit, plus money, coin, and to be able to more efficiently send that through online means. And our view is that you can reinvent the internet with that and change business models. So as you mentioned, being able to read a newspaper article online and pay only 5 cents for it, as opposed to having to pay $10 for a monthly subscription. What could you do to reinvent the internet and, for example, address some of the concerns about internet privacy on social media and sale of consumer data? What if social media platforms didn't have to sell your data to make money, but maybe there's a social media platform where users pay each other in small micropayments of Bitcoin to comment on their own content? That's the kind of future we see that's very powerful. What do you think?
I think it's an enormous element of change that society needs to, policymakers need to see right now, and then society it will grow to see this. But right now, that baseline of education for policymakers is very important, because what we don't need out of Washington or the states is to restrict or crush or try to kill this type of technological advancement.
Yeah, let's turn to that. Let's talk about your views on whether or not lawmakers and policy leaders need to be looking at creating or enacting new laws and regulations, or whether they should first look to see how these new technologies fit into existing regulation.
Well, first, what we see is the initial reaction out of Washington is that everything must fit in the existing regulatory regime. Which is not really keeping with where we are in terms of the technology of Bitcoin or the distributed ledger technology. And so what we need is collaboration across our regulatory footprint in Washington. That's what I've tried to encourage. And have those conversations about what this thing is. It is neither a commodity nor a security. It does not fit into either rubric well. And in fact, it's very difficult to think of it on really the two planes of thinking we have in Washington. This is a whole new way of thinking. And that is very difficult for Washington to adapt to at its best. And Washington is currently not at its best. At the state level, we've seen various different types of adoption of distributed ledger technology and an acceptance of cryptocurrencies and Bitcoin. And I think that will eventually percolate up into policymakers' better understanding in Washington. But what we need right now is to drive that understanding. For policymakers, we need to make sure we drive that understanding and education of the benefits and the needed and necessary changes to regulation and laws, so we can have further adoption of this technology here in the United States.
One of the main concerns that is voiced about digital currencies is money laundering, use for illegal purposes such as terrorism financing. And one of the struggles the industry has been facing is how to deal with AML compliance and KYC compliance. Do you have thoughts on how the industry as well as policymakers can encourage use of digital currency while balancing the need to have AML compliance?
This is a great point where you're dealing with something that is wholly different than what we've ever experienced before. We have a high level regulation around the digital movement of money, right? And so you go in and interaction with intermediaries. Mm-hmm. So that's how the regulations work. So you go into a bank, and the bank has a reporting requirement. Yeah. Well, so that's one way of thinking. You then have this other way of thinking that the Treasury put forward with what I think is, and FinCEN put forward with what I think is bad regulation, which is to say that cryptocurrencies are cash. So we're going to regulate digital wallets like cash. That is cumbersome and it is incorrect. So we have these two forms that actually don't work for this third form. So let's step back. And in my view, I think what you see is a fulsome regulatory environment because you have money servicer licenses at the state level. You have a state like New York that has gone even further when it comes to cryptocurrencies. And New York is not what I would call a light touch financial regulatory state, but they're more thoughtful when it comes to cryptocurrencies, which is encouraging that they can get it and still have what I would say is an onerous set of regulations around financial regulation, but they can get it in this atmosphere of around innovation. So looking at money servicer licenses, I think we have a fulsome regulatory environment for AML BSA, and that should be sufficient. It is sufficient for me. And then on top of that, we have the financial regulatory agencies, and you have the state security apparatuses as well that are all over this, and the state attorneys general. So you have this huge law enforcement network that is policing it and doing I think a good job with the tools that they currently have. So I don't think we need to go into a more onerous atmosphere around cryptocurrencies and their adoption. I don't think that's necessary, nor do I think it's proper. And I do think it would inhibit innovation and the adoption and the raising of the funds in order to adopt these technologies here in the United States. So I think we've got to get the right touch, and we're currently a little on the onerous side, I would say, and not quite as smart as we need to be in order to get this right.
Now, over the past year or two, there's been a significant, I would say, uptick, as I've noticed, in proposed digital currency and blockchain legislation, including at the federal level. And it seems likely that's probably going to continue from, my instincts. From your position on the Financial Services Committee, what would you like to see accomplished, if anything, legislatively in this new Congress?
Well, I think the first obligation is do no harm. I've worked intently over the last 6 to 8 years to stop horrible ideas from making their way through the legislative process. So number one, do no harm. Number two, we have to build off of what the Securities Exchange Commission is laid out in the basic guidance for enforcement, but guidance that they've given in order for legitimate money to come into the development and the capacity to deploy new cryptocurrencies and new innovations. So we have to build on that legislatively so you can have more legitimate dollars flow into this technology and the development of this technology. Third, we need to get the tax piece right. The idea that you're going to have an onerous set of tax regulations around this new technology because they see volatility and therefore the IRS and Washington generally sees opportunity for enrichment right, into the federal treasury. I think we've got to get the tax piece right. Those are the three things that I'm focused on. Do no harm, right? Getting legit dollars into the development and deploy and the ability to deploy. Third, finally, getting the tax piece right. And I think those are appropriate goals for the next 2 to 4 years.
I'm glad you mentioned the tax issue. It's a increasingly raised issue within both the digital currency community of investors, supporters, as well as businesses, because of the volatility of digital currency prices. Do you have any sense of how an industry might manage the need to track, pay gains, taxes on gains or losses of digital currency, especially as we move to a world, as you hope to, which is lots of small transactions, right? Not sending $1 million in Bitcoin across the world, but using it to transact in daily life. How do you think we can manage tax monitoring of that?
Well, I think that's the absurdity of what the IRS, the current IRS rules outline, is that in order to, if you're a speculator, let me step back and say it a different way. The IRS views those that own or hold cryptocurrencies as pure speculators. And that there is no use case for any of these technologies. That is default in the IRS rules, which is basically saying everyone is out there making millions and billions on this, which is not in fact the case. In order for these assets to be widely deployed, you have to have democratization of their holding. And these IRS rules actually run quite counter to that. That's why I think we need to get it right so that you can be a holder of these. And when you accrue value, it's accrued value that is sort of a different third case. It's neither earned income nor capital gains. It's got to be this third thing. And there has to be this sort of wide set of de minimis standards so you can hold these, use them, buy and sell things, and make them deployable in a massive way.
So it's about distinguishing, for example, between people who focus on trading digital currency for investment versus what we hope to see, a world of wide usage by everyday people of digital currency for daily life.
The component that I think is important to think about here is that when you have that deployment piece, right? The cryptocurrency is really a key to open up some other movement.
Yes.
And so it may not be something that is intentional, that it has value. That may be the secondary effect of it. It may be the thing that enables you to subscribe or read 15 different newspapers. We don't know. And so therefore they're thinking of this as pure speculation rather than in essence, me holding my house key. Yep. That enables me to have this value of this space that my family and I get to live in. But that key is not necessarily an enrichment tool, right? Mm-hmm. And so the asset that I'm opening or getting access to may be the more interesting piece here. And so tax policy doesn't really get that. And I know that's sort of a wonky way to talk about it, but with policymakers in DC, they just think of it as a speculation tool rather than a means to another end, which I think is really the fascinating piece about cryptocurrencies and a distributed ledger system, if you will.
Well, let me layer a specific example onto what you said so that it's maybe clearer for people watching this. So for example, with blockchain technology, I could build smart contract systems that use a smart contract on a blockchain to provide access, let's say, to unlock an apartment that I rent on Airbnb or a house I'm renting through digital locks that are on doors these days, or to open my car even, for example, that can happen in the future with my mobile phone. phone. And the digital currency is almost like a carrier pigeon sending data back and forth cryptographically to lock and unlock access to things. In that case, the digital currency is acting, it has a monetary value somewhere, maybe small, but it's acting for a functional purpose to provide you access to a piece of property or a vehicle. And in that case, it raises questions about, how the IRS or a taxing authority should even look at that, or whether they should at all.
Well, and it's also a misunderstanding that the potential here is that you have connected with your daily life, perhaps dozens or hundreds of transactions.
Yes.
Right. And I think that is the world of future, potentially thousands of these small transactions. And that would enable your life in a more seamless way. Right. We see the clunkiness of digital payments even right now on the deployment of a smartphone and going into a shop and buying a donut or a coffee or something. And that's clunky. What we can't think of or contemplate is the world of digital payments that is that is in our future, right? Because we think of the clunkiness of now, or we think of the clunkiness of a cash transaction where you have to count out the 22 cents change from the register in order to hand it back to the customer. We're talking about a wholly different view that is broadly enabled by technology that you may not be able to see, you may not be able to feel, but you'll experience the good results.
Yeah, in the future, it's estimated about, in 2024, there may be 80 billion Internet of Things device endpoints around the world, right? As we move to IoT devices everywhere in our cities, homes. And the future we see is that not all, but many of those data interactions through IoT devices, you go into a grocery store like Amazon Go, you go into a parking lot, may be monetized, because maybe that's how you pay through your mobile wallet through Bitcoin for getting access to the parking lot for every mile you drive on a toll road, for example, that is pulled out of a digital wallet. So I think that the future we see is very much in line with, I think, your vision of 10 years of a financial future where digital currency is in maybe thousands of transactions a day for us.
Right, and you think of having to go through a toll booth as the example you just used. Going through a toll booth 20 years ago versus having an Easy Pass or some digital version of it. What does that mean? It saves millions of hours a year just by that one innovation that isn't right now a special thing. It's just one of those things in our lives that we don't really think too much about.
What are some other exciting possible use cases of blockchain technology that you see or that make you very excited for the future, particularly, for example, in the public and government sector? Do you see uses that would help make a better, more honest, more efficient world?
Well, first, at the federal level, let's start there, then we'll go to the states. But at the federal level, 3 years ago, I got signed into law a bill that required the IRS to have an API so that consumer lenders can verify income data, right? And this is permissioned. Up until 3 years ago, actually up until 2 years ago, they used a fax machine. That was the IRS requirement, a fax machine, right?
I haven't seen those in like 20 years.
It's amazing. I don't know that I've seen a fax machine in 10 years. So the federal government's very far behind. They haven't even caught up for APIs. And then on top of that, we see enormous number of data breaches in the federal footprint, in the private sector, but in the federal footprint especially. And so those honeypots of data and information, the federal government keeps building and is intentional about building up these really clunky last generation systems. So the federal government has to advance dramatically. And I think blockchain technology for the our federal record keeping is really quite right, and that is going to take quite a while to do. At the state level, I think you'll see this at the record keeping levels of counties and states. Very basic information
Title
that will
registry, for example.
right when you buy or sell a car or when you buy or sell a house. Very, very basic societal pieces of information that governments do a good and wise job of holding on to and keeping track of. Those will move into a public ledger of sorts. And we're seeing this county by county and this movement. And so I think you'll see certain states have this adoption, and it will be 3 to 5 states, and then it'll be 40. Right. But it's going to take a while to get this sort of the group of policymakers and elected officials seasoned to this and see the huge advantage and the huge cost savings year over year once it's deployed. And so then between that county level basic data and the states, I think we'll see a few states. My home state of North Carolina, I think, will be one of them, where they want to purposefully be the leaders in blockchain technology, and putting more onto a blockchain across the governmental footprint to give people open access to their data. And so I think that's a huge opportunity at the state level, and I think it's going to be the big driver here in the United States for federal policymakers to catch up.
Yeah, you mentioned the placement of things such as asset title records on a public ledger. Do you have views of the likelihood that public blockchains, such as a Bitcoin blockchain versus permissioned ledger systems, which there are competing ones, will be most useful for or most likely to be successful in driving growth of the industry?
Well, I think the marketplace will provide that, and I think it's going to be the particular capacity of the technology that will be the driver of it. And so for me, I'm quite open to this, and I'm just ensuring that there's pressure, there's appropriate pressure to drive in that direction. Right. And I am sort of technology agnostic.
Yeah. One of the advantages we see of public ledgers, and some people agree with us, some people don't, is the ability, particularly for public services, like public records, to be public, auditable, verifiable. And that's something that we're driving forward with in our world. I want to address your point about how long it may take a country the size of the United States to adopt in public or government services a blockchain or digital currency set of technologies. Because in our ecosystem, there are some of our companies that are working with the small island nation of Tuvalu in the South Pacific, only about 11,000 people across various islands. It was just announced in December, they'll be trying to become the world's first paperless society by moving all of their government records and information to a national public digital ledger they're creating on our blockchain, Bitcoin SV, which is public. They're just starting. It'll take a while to do this. But it's a small country, so a good first test case. I'm curious what your reaction to that effort is and how long you think something like that might take to actually happen in any US state or just federally at all.
So I'm encouraged by it, because what you see is a country that is leaping ahead of the rest of the world, and that is really encouraging, because first it puts them on the map, so to speak, right? Meaning that they stand out, and there is economic development potential out of that outstanding movement. Just like the rule of law, smart dollars will chase the rule of law regimes, right? To go to safe and sound regimes where you're protecting, you have rights. Likewise, going to societies or governmental structures that embrace this technology tells you a lot about the substance of who they are. And so what I would tell you is this is a wake-up call for the United States, that we've got to make sure that we are not following but leading on this. I would tell you that there's a beauty in our governmental system. There's a lot of talk right now that it's dysfunctional. Yeah, all that's true. But what I would tell you is the beauty of our governmental system is that we have 50 states, we have the territories, right? And all of those regimes are slightly different in what they can offer you. And there's beauty out of that diversity, right? There is beauty out of that diversity, and you get different types of choices in the type of government you have and the results of that government, right? I would tell you, if you want a socialized system for healthcare, you can go to Vermont. If you want the equivalent of a stick while they amputate your leg, there's another choice for that, right? You have this huge choice just on healthcare, but you have this choice on regulation as well, and tax policy. And so people are moving based off of that within this large free market of the United States. And they're making these choices. On top of that, at our federal system, you may have onerous regulation in one sphere, but in a neighboring sphere have enormous freedom. And so the divisions of regulation at the federal level and the divisions of regulation between the feds and the states give us choices and options and allow innovation to flourish. And at the same time, we have rule of law that protects us. And so innovation can thrive when it is left to be open. There is a capacity to get investment capital, and you have the rule of law to protect you when you fail and when you succeed.
Let's talk about one of the people who will be likely leading some of these rule of law or policy enforcement efforts, which is Gary Gensler, who you've come out publicly in support of in terms of the new administration's nomination of him to chair the Securities and Exchange Commission. And I believe you've applauded the choice because of his knowledge and understanding of blockchain and digital currencies. Can you give us any more thoughts on that and why you think it's important that we have more leaders, regardless of political spectrum, who have understanding of this blockchain space?
Well, I'm positive about his nomination because he has spent time studying and understanding financial technology, but in particular cryptocurrencies and the opportunity that they present. So he will be, I think, a positive light in that regard. I'm not going to agree with him on everything, but I'm encouraged that he has a forward looking view of cryptocurrencies, distributed ledgers, and financial technology broadly. In that sphere, I think we can have some nice cooperation that can get good legislative and regulatory results.
And you're right. No one's ever going to agree with another person on everything, and especially in this very partisan political climate we live in the United States, which sometimes can be unfortunate. How do you think that policymakers as well as legislators can achieve results that advance blockchain and digital currency growth, because I don't see these are as partisan issues for the most part, right? This is about technology. So how would you encourage them to collaborate together more to achieve proactive growth of this industry?
Education, 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 education. That has to be the primary driver here. Most policymakers are not informed about the basics of cryptocurrencies. The basics of blockchain technology, just the basics. So we need that base level of education to rise, and then we can build off of that platform. But it has to be built around solid information rather than saying, I've heard this or I heard that. You need to understand first. And I think if we get that understanding right, then the policy will necessarily be right. Because to your point, Jimmy, this is neither a left nor right issue. This is not about more or less regulation. It's about smart regulation rather than dumb regulation. And this, we can have enormous technological capacity brought to bear if we just err on the side of being smart rather than dumb with the regulation.
And let's end with this question. Our association is comprised of developers, companies all across the world who are building, they think, the future of blockchain technology on a particular form of Bitcoin. And we also work with people across the entire industry in other digital currency and blockchain camps. What would you tell them in terms of what they can do best to grow the industry and do it in a way that's collaborative with leaders such as yourself in government?
Well, like I said, on the education element, they need to connect with policymakers at the state and federal level and educate them and their staffs. I think that is really important as we participate in our form of government. We need to make sure that we have smart policymakers and their staffs are smart. And I think we should do that on, regardless of your party affiliation or my party affiliation or any, that's a secondary issue. That the primary issue is making sure people are informed. And so having an association that drives that conversation is really important. The second thing I would say is we need to have quantifiable examples to bring to help our society understand what's happening here, right? And it's not just the U.S. dollar traded value of Bitcoin that's the driver of the conversation. It needs to be the real world example and the benefit that the average person in society is going to see and feel or experience. So we need to get those examples more broadly out into the marketplace. I think that will help drive the conversation as well.
So whenever your legislative and policy career ever comes to an end at some point in the future, what do you want to be most remembered for in terms of driving the growth of fintech, digital currency, or blockchain technology?
Well, I think primarily I want to be known for pushing innovation and driving innovation. That is my focus. That's my view, and so that's sort of the big piece, innovation. And I want my name connected with innovation. Secondly, I want to see more democratization of capital formation. I want average everyday investors to have the same opportunities that the Titans had a decade ago. I want average everyday investors and average everyday employees of companies to have the same investment options as a Fortune 500 C-suite has now. So democratizing capital and driving innovation are my two primary focuses, and I think they're quite linked as well. That's what I'm focused on. As a result of that, I think we'll have greater financial inclusion. I think we'll have cheaper access to credit and more available credit as a result of driving innovation and democratizing capital.
Well, we hope to see that future come. And I want to thank you for having this conversation with me. It's been really, really a pleasure. Thank you very much. And I hope you succeed in a lot of your efforts.
Thanks, Jimmy. I appreciate it. And thank you all for, this great conversation and the great work that you're doing to communicate more broadly as well. So thanks so much.
I appreciate it. So to everyone watching, this was U.S. Congressman Patrick McHenry from North Carolina, member of the House Financial Services Committee, and a really great voice and leader, as you can see, for innovation and growth of fintech technologies, especially with blockchain. This is Jimmy Nguyen. I'm founding president of Bitcoin Association, the global industry organization that advances Bitcoin SV. And we hope you join us on our journey to educate people about law and policy for responsible growth of blockchain technology. Thank you.